Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, U.S. President Trump bumps up to 15% his new tariff rate after the U.S. Supreme Court ruled his reciprocal tariffs illegal. What it means for Philippine trade and investments with the U.S. with economist George Manzano of the University of Asia and the Pacific in Davao City. He previously served as member commissioner of the Philippine Tariff Commission. So what next for Philippine assets following the confidence shock that led the Bangko Sentral to continue slashing its key policy interest rate? Mike Enriquez, President and Chief Investment Officer of Sun Life Investment Management and Trust Corporation, joins us live. And the confirmation of charges hearing of former President Rodrigo Duterte at The Hague begins today. U.S. President Donald Trump has raised tariffs on all imported goods to 15%, a day after the Supreme Court struck down his preferred economic tool. Trump initially placed a global duty of 10% to replace sweeping tariffs ruled illegal by the High Court. But he increased that levy to 15%. The maximum limit permissible under Section 122 of the Trade Act of 1974. The global tariff will only be in effect for 150 days. After that period, Trump plans to invoke Section 301 of the same law, allowing for longer duties as long as there is a months-long investigation before their imposition. The U.S. Supreme Court rejected Trump's tariffs because he lacked authority under the International Emergency Economic Powers Act of 1977. Trump has expressed some uncertainties about refunds and the deals already forged.
Are you saying that you don't plan to honor refunds for companies that file for them?
I just told you the answer, right? I told you the answer. It's not discussed. We'll end up being in court for the next 5 years.
On the trade deals that were negotiated using IEEPA tariffs,
Yeah.
do those stand now, or are they have to be
Well,
redone?
some of them stand. Many of them stand. Some of them won't, and they'll be replaced with the other tariffs.
In a statement released by Malacanang, Finance Secretary Frederick Go says the Philippines will continue to engage with the U.S., an important trade and investment partner. Go adds that majority of Philippine exports are already exempted from tariffs even before the High Court's decision. In her statement, Trade Secretary Cristina Roque says there is a need to keep trade and investment relations between Manila and Washington robust. The U.S. imposed a 19% tariff on Philippine goods after a bilateral meeting between Trump and President Marcos in July. In exchange, Manila removed levies from key U.S. imports, foregoing revenues of 3 to 6 billion pesos annually. The U.S. eventually granted tariff exceptions for certain goods, mainly agricultural products like coffee, cocoa, and bananas. Experts say Asian countries won't reopen trade negotiations with the U.S. to avoid confrontation. Countries like Japan, South Korea, India, Malaysia, Indonesia, and Taiwan all race to forge deals with the U.S. to circumvent higher tariffs. In exchange, they made difficult concessions, such as lifting duties on U.S. imports and pledging millions worth of investments. Henry Gao of the Singapore Management University tells Reuters the dominant instinct among Asian nations is risk management rather than confrontation. He says the U.S. is not just a major export destination for Asia, but also a technology partner and financial anchor. Stephen Okun of APAC Advisors tells the New York Times that trade partners who agreed to a tariff above 15% are now disadvantaged. They face the question of whether to drive a harder bargain since Trump's leverage is diminished or keep the status quo to avoid retaliation. Investors cheered the U.S. Supreme Court's decision to toss Trump's tariffs. The Nasdaq rose by 0.9%, S&P 500 climbed by nearly 0.7%, and the Dow jumped by nearly 0.5%. Market shrugged off these global tariffs, with investors already anticipating that Trump would find ways to save his economic policy. Stock futures are falling due to the increased global tariffs. The Nasdaq is down by 0.8%, S&P slides by 0.6%, and the Dow decreases by over 0.5%. Here to make sense of it all, live from Davao City, economist George Manzano of the University of Asia and the Pacific. He previously served as member commissioner of the Philippine Tariff Commission. It's good seeing you again, George. Welcome back to the program.
Thank you for the invitation.
Right,
Kathy.
so it must
Glad
have
to be
been
here.
a very interesting last 72 hours since the U.S. Supreme Court's decision declaring Trump's tariffs illegal, George.
Yes, never a dull moment.
Never a-
Actually,
yeah.
yeah.
But does it sort of, deja vu? Same time last year, it was just about the same that we worried a lot about those tariffs.
That's right. But the current development is basically gives a different light to what we consider as the new normal. After 1 year, basically the world has settled into the new normal of living with reciprocal tariffs, and now that's been changed with the Supreme Court ruling that these reciprocal tariffs, President Trump overstepped his authority in imposing tariffs, and basically he has to rescind those. Except the new normal will not be the status quo before reciprocal tariffs. Basically, the new normal is that we're going to live in a global trading system which will be full of uncertainty, and just a few hours or after the Supreme Court decision, and as you mentioned, we have this across the board global tariffs of 10, now 15%. Now that's the new normal.
It is.
And
So the new normal
yeah.
at 15%, but we're still at 19. If we make out what 4% means, does that mean we're at a disadvantage versus other ASEAN nations?
No, in that sense that the new normal is across the board. So all countries are subjected to it. So it's just like lifting the average. No, it does not discriminate one country from another. Like all countries are hit with a 15%. So in terms of ranking and competitiveness to market access to the US, it remains the same, basically. But there's there will be across the board tariffs now of 15%.
So given that everybody's now going to have to face 15% across the board, does that even the playing field then for us, for the Philippines?
Well, the big question really is that are we better off under this global tariff compared to the reciprocal tariffs? And the answer to that depends on whether this Section 122 global tariffs will give us the same exemptions as we enjoyed during the reciprocal tariff era when we negotiated, where almost half of our exports to the U.S., semiconductors and some agricultural products, were exempted from the reciprocal tariffs. If those exemptions are not going to be, retained under the global, under Section 122, then we would, I think, be worse off in that regard.
So that's what the government needs to do, George, is to fight for status quo. Whatever we got in the first round of the tariffs, now nullified by the Supreme Court, is something that we could live on, exporters could work on going forward?
Yes, that is something that we could definitely work on, but that's still a bilateral deal with the United States. So you have now 122, but that's just good for 5 months. Then I think President Trump will continue to search for legal instruments to replace the reciprocal tariffs, and I think there's mention of Section 301 and 232. Now, Section 232 has something to do with the U.S. administration imposing tariffs in a response to threats to national security. And indeed, they have done that with steel, aluminum, copper, maybe critical minerals, automotive, even timber. So the issue here is whether we export those products that are likely going to be targeted by the Section 232 perhaps after some time when the Section 1, the global tariffs would have ended. And I think no, I think we're not a big producer of steel nor aluminum. We don't export soft timber. We're not a big producer of even cabinets to the US. Unlike Vietnam, nor are we a very big exporter of automobiles to the US. So in terms of Section 232, I think it's highly unlikely that we will be hit badly compared to other countries. The other legal instrument that the President Trump is thinking of using to replace reciprocal tariffs after perhaps the Section 122 global tariffs would have run its course is Section 301, which is basically giving the U.S. administration the leeway to impose tariffs when they feel that they're subject to, let's say, unfair trade practices. Their partners do not honor their agreements. Their partners basically steal intellectual property. So that is more country specific. But our bilateral trade relationship with the U.S. is basically, we're not a big player there. We don't enjoy a very sizable trade deficit with the U.S. Nor are we, there are threats that or insinuations that we're stealing intellectual property or we're not honoring our WTO contribution regulations to the United States. We are not a threat to the U.S. when it comes to unfair trade
Which
practices.
brings us to diversification, George. We've had a year to do that. How much have we done so far in your assessment? And how protected are we from the fact that if we did diversify enough, whatever the U.S. does won't hurt us so much?
I think we're well. Credit to our government officials. We've been exploring. We have the UAE. Then we're deep in talks with the European Union. Now we are exploring possibilities with Canada. That should be our long-term solution, with or without Section 122 or Section 301. It will be like a dominant strategy that we need to do regardless of what the United States, because it will give us some bit of certainty, when it comes to trade. At the moment, trade with the United States is full of uncertainty. This new normal, just as we think we are already settling in a new normal, then there are these new issues that come up. And
right.
business would like really to have a predictable environment.
Well, it helps to know 101 on trade policy there. Thank you so much for your insights. George Manzano of UANP and the former member commissioner of the Philippine Tariff Commission. You're watching Money Talks. Coming right up, the confirmation of charges hearing against former President Rodrigo Duterte begins today. And payments digitalization in the Philippines is moving slower than forecast, according to the Bangko Sentral. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Supporters of drug war victims gathered outside the International Criminal Court in The Hague Sunday, a day ahead of the confirmation of charges hearing against former President Rodrigo Duterte. Members of Duterte Panagutin Europe staged a protest calling for justice and accountability for thousands of victims of the Duterte drug war. Protesters held placards and banners urging the court to move forward with the case and ensure voices of victims will be heard in the proceedings. In a few hours, the first day of the four-day confirmation hearing will kick off, determining whether the case will proceed to full trial against the former president. Duterte is facing 3 counts of alleged crimes against humanity charges, rooting from his administration's war on drugs. Here at home, religious groups, artists, and political figures also gathered in EDSA Shrine for a prayer power program dedicated ahead of the 40th anniversary of the People Power Uprising. Cardinal Pablo Virgilio David opened the program with a midday mass, renewing calls for accountability and defending democracy. It was followed by a short program and musical performances. Today, another protest action organized by the same group is set in the Boy Scout Circle in Quezon City, condemning the extrajudicial killings of the Duterte administration. On Wednesday, the main EDSA 40 protest will coincide in the 3rd trillion peso march, which aims to highlight calls against corruption and political dynasties. In other news, as the Philippines marks its first year off the Financial Action Task Force gray list, Bangko Sentral Governor Eli Remolona Jr. said there is still a risk of returning, but stressed authorities are working to prevent that. In an exclusive interview on this program, Remolona, who also chairs the Anti-Money Laundering Council, said regulators are closely monitoring money flows and strengthening safeguards. The country was removed from the FATF gray list in February 2025 after addressing deficiencies in its anti-money laundering and counter-terror financing framework. Oversight has since been tightened, including freeze orders linked to the flood control corruption scandal.
I have to admit there's some risk, but we're doing all we can, and I think they tend to appreciate what we're doing. We're doing all we can with money laundering, for example. We're tracking money flows very carefully, and they see that. So I think we won't go back on the list, but of course there is a risk.
In the same interview, the BSP chief said the country may fall short of its target to make 70% of payments digital by 2028. He cited slower than forecast adoption and rising cybersecurity risks.
It's been slow. We're on track, but maybe it will take a couple more years than we thought to get where we want to go.
Beyond 2028, Governor.
Yeah, I think so. The digitalization continues. It's a good thing. At the same time, it brings with it some risks. We worry a lot about cyber risks.
And a look at the markets now. To recall, U.S. markets jumped on Friday following the Supreme Court's decision to reject Trump's tariffs. The Nasdaq rose 0.9%, S&P 500 climbed by nearly 0.7%, and the Dow advanced by nearly 0.5%. Benchmark 10-year Treasury yields ticked up to 4.084%, and gold prices jumped to $5,059 per ounce. Stock futures are falling due to the increased global tariffs. The Nasdaq down 0.8%, S&P 500 slides by 0.6%, and the Dow decreases by over 0.5%. Asian markets are a mixed bag this Monday as we pick up investors' first reaction to Trump's global tariffs. Japan's Nikkei 225 down 1.1%. Australia's ASX 200 slides by over 0.5%, and South Korea's Kospi is up by nearly 1.5%. And a quick check on our own markets on this first trading day of the week, and also the first reaction that we're seeing on the PSEI opening this Monday. Little change, 6,468. It is up by about 0.1%. Stock market jumped by 0.9% on Friday as investors digested the Bangko Sentral's quarter-point cut in policy rates. Analysts are expecting a positive momentum for the bourse this week, following the BSP's decision ahead of corporate earnings releases. As for the Philippine peso, it opened today stronger, 57.95 to the dollar. The local unit returned to the 58 peso mark, weakening Friday by 15.4 centavos. Analysts see the peso dropping further due to growing tensions between the U.S. and Iran. The 10-year government bond yields remains unchanged at 5.968%. So what next for Philippine assets following the confidence shock that led the Bangko Sentral to carry on cutting its key rate to 4.25%? With us now for more is Mike Enriquez, President and Chief Investment Officer of Sun Life Investment Management and Trust Corporation, Sun Life's investment management and trust arm in the Philippines. It's good seeing you again, Mike. Welcome back to the program.
Hi, good morning, Cathy.
So first up, how'd your funds do in 2025? If we could just baseline from that, because given all the volatility that you've navigated from Trump's first salvo of Trump's tariffs to the last quarter shock and off with the country's flood control scandal.
Yeah, admittedly, last year was a bit challenging, especially on the equity side. But we generally had a good run, especially across equities and fixed income, but more so on the fixed income side. Majority of our funds have outperformed their respective benchmarks. So I think a lot of our investors are quite happy. More so on the fixed income side, we all know that the equity market, especially in the local side, was a bit on the flattish and side, in spite of the fact that we've outperformed, but generally it didn't really perform up to investors' expectations last year. So we're hoping this year can change a lot of things. So
But
we've
can
been
it?
seeing a lot of
Mike,
development.
what do you make now of that confidence shock underscored by the BSP governor himself? When I spoke to him last Friday, he did make a mention of confidence as really the gauge, if you will, or the lack thereof. He mentioned that monetary policy can only do so much with the cutting that he's done. Just listen to this.
We feel that we're at the point where monetary policy cannot do much more. Interest rates can't do the trick. It needs help from other things.
And Mike, those other things include everything else a national budget could do on the fiscal side, restarting big spending on public infra, encouraging private construction. How are you reading into the timings of that economic recovery? And how is that influencing then your investment strategy between stocks, bonds, and cash?
Well, clearly the governor's right, and I agree with his assessment. Monetary policy can do just so much. I think he's delivering the policy normalization that we have been expecting to help boost the economy. However, the government has really to do its part in terms of the fiscal spending. Clearly, our GDP lacked last year, given the more tame spending from government. And we all know that this is a consumption-driven economy, but as you well pointed out, investor confidence and the consumer's confidence to spend is really something that would matter a lot on how this economy will continue to recover this year. So, well, we've been seeing a lot of good indicators that, number one, the government has really been very focused on addressing some of the fiscal gaps that happened last year, and they've been addressing a lot of these so-called scandals that has rigged the market over the last few months of the year. So this year, hopefully we can see more government spending and really spending on the right projects that would provide that multiplier effect on the economy that we are looking at, infrastructure and
it's really what everyone is looking for, the that catch-up coming to be. But then you've got global risks again reigniting fears with the illegality that the Supreme Court mandated over Trump's tariffs, really upping the ante right now. I've just spoken with George Manzano saying 15% is an across-the-board tariff imposition across all trading partners. How is that then figuring into your level of risks? Is the global risk bigger than local? What are you now seeing, and how is that going to change your asset allocation?
Well, I think, Cathy, based on the first time that Trump announced the tariffs for the global partners. The Philippines really didn't was not affected that much because we all know that we're not really an export-oriented country. I think what we really consider more on the sentiment side is how global markets react to this, because anything that will happen to global markets, all the local equity market continues to react in spite of the fact that we are still just on recovery phase, right? So we haven't really moved the needle. And then again, when we see a lot of volatility happening from other markets, then our local equity markets continue to be affected as well. I think externally, what we're really watching out closely is really this US-Iran deal that is happening. It might escalate into something worse, so hopefully not. So that is something that will trigger. That's why you've been seeing oil prices starting to go up again. So that would have a more direct effect on the Philippines in terms of oil inflation. That would trigger again some uncertainty on the economy's recovery.
Okay,
Other
as a
than that-
final point, Mike, then, how are you going to strategize? How differently or similarly are you going to position in your fund strategy this year? Is it still going to be more fixed income or more little of stocks? Because now we're seeing those foreign fund flows come in.
I admittedly, there are our local equity market has absorbed a lot of the negative news. I think there is time right now to take on local equities. But for us, fixed income continues to be our primary focus because we see long-term rates will start to adjust lower. But I think local equity market is worth a second look at right now, given that a lot has already been priced in and there's more prospects for it to grow.
Okay, depends on your risk appetites then. I guess that's the message. Thank you so much for joining us, Mike Enriquez of Sun Life Investment Management and Trust Corporation. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow at 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great day ahead.